Hello, uh, welcome to week one. Um, During this week, we are going to discuss the stocks and bonds. By the end of this module, um, you'll be able to learn three main objectives. First, to understand the principle of bonds and stocks. Second is the difference, similarities between bonds and stock. And finally, understand the difference between corporate and government bonds. In this module, I have included some resources that would help you to explore further about the subject. There's a video link, including the Kang Academy, which gives you some principle of bonds and stocks. There are a couple articles that could help you to learn a little bit more about the subject itself. So, what's bonds and stocks? There are two ways a company can raise capital. First is to either borrow money from investors by selling their bonds. Bonds is essentially an IOU or a debt that the investor made to make a loan to the company. A second way of raising capital could be selling shares or the stocks. It is basically an equity that the company is giving the ownership share to the investors. So what are the differences and the similarities between the two? Bond market itself often do not have a centralized exchange or a trading system, whereas the stocks would have a centralized exchange like the stock market. Look at the New York Stock Exchange, the Chicago Stock Exchange, Hong Kong, London, and so on. In terms of the holders, the bond holders are essentially the lenders to the company. In this case, the issuer or the company itself. Where stockholders own a part of issuing of the company share. They both are considered to be securities. In terms of yielding, the bond has nominal yields. Investor cannot collect that yield until the bond is mature at the period of time, whereas stocks would have dividend yield or the income per share that the earning yield can be given back to the investors. In terms of participants, they are both considered to be investors. Participant investor usually through an institutional investor, whereas stockholders would be through a market maker, a floor trader, a floor broker. The owners, obviously one is the bond holders and the other one is the stockholders or the shareholders.